Welcome back, everyone. It has been a while since I've done one of these videos, but I thought it was probably about time where I gave a refresh general market thoughts update video, and here we are early October. It's been a few months, and today is the day. So one of the things that started a few months ago and is still going on today to a degree is options madness, I would call it. The VIX remains elevated. The VIX, for those of you who don't know, is basically an index that tracks volatility and is used to price options. So the price of options is remaining high because uncertainty is high. And so despite that, people are loving their historically expensive calls. Now, this surge of popularity does seem to be at odds with the some of the sentiment readings of bearishness out there, but I don't really have a full answer for that. I do know that there is a well, if you look at who was buying the options, one there was SoftBank when everyone loved when that came out. I'm except for the SoftBank shareholders, but they've had a track record of being bullish. Let's go with that. Now, while I think it's very important to point out that there's no single point that I would say that I would call data. Um, are a number of things that I have been watching that, as expected, are expected by many people. I don't know if everyone expected it, but as expected, many things bounced hard off of the low. So when we went back from shut down to not shut down, there was a lot of things that bounced back really hard and really vicious. So the data points were hard to read all over the place, but massive bounce back. And that was expected to a point. I don't know how much, um, if we were expecting it to V-shape recover. I don't know what people's expectations were there. But one thing I've noticed recently is that the initial snapback has slowed in pace in a lot of areas. And so we're well off the lows in many places, and we are clearly out of the terrible situation that we were in a few months ago. But the rate of improvement in many places has diminished. So the vicious snapback is, I think most of that has played out. Now, this means that from here on out, the it's going to be harder to recover. So from where we are now to get to where we were before, the next few steps are probably going to be more challenging to take. Now, does that mean that they won't happen? No, probably not. They'll happen at some point. I just don't know when. Because we've got to a point where the easy gain, the easy bounce off the low has seems to be mostly in, if not wholly in. And so now there's more work that has to be made for every gradual step here. So I don't know if markets will kind of try and put in a base here. I don't know if they're going to roll over because things have been, expectations have been set too high. I don't know. Or we could just continue improvement at a slow pace. And this is the big question for the next few months because I don't know exactly what comes next. I mean, we never do, but I think that the bulk of the bounce back rapid trade is probably uh, played in, played out at this point. And this seems to be true for a lot of commodity prices also, because if you looked at where the prices were in March-ish, they were falling, falling, falling. Nobody knew what was going on, but they got too low, and almost across the board, too low, too copper, zinc, whatever, what have you. They were unsustainably low, and that was very easy to see. Everyone could see that. The only question people wanted to know then was how much worse does it get before things start to recover? Will things start to recover? So everyone knew the price was, well, I mean, I think many people knew the price was probably too low in the long term. But anyway, those prices have bounced back to a middle ground price. So they're not, okay, high prices, we need to expand, we need more production. They're not low prices, we need to shut off production. They're kind of in the middle. So not boom prices, not bust prices. So there's two-way risk. So that said, I was thinking of metals, honestly, when I narrated that last slide. And then I flipped the slide and I'm like, wait, hang on. Energy is a bit of a different story here because I think the energy prices are back towards more end of the low range, particularly, well, I mean, more so across the board, but I was thinking about oil. And oil, I didn't actually buy any in March. I told you about that after a few months ago where I was doing other things. I was watching in March, but bought other things. Recently, with the move a bit lower, it's back onto my watch closely list. Now, I don't know if there's going to be some, if this bleed out is going to continue into tax loss season and if there's going to be some more pain there. If there is, I think that may be an opportunity to buy. Again, that's maybe a few months away, and a lot can happen between now and then. Maybe the buying opportunity was yesterday, maybe it's tomorrow. I don't know, but that's an area that I'm watching closely at this point. Now, the elephant in the room. Do we get a second wave of you know what? Because it seems to be happening in a number of places. So while it looks like there's a second wave, I don't know. I don't think that we and the market will panic again in the same way as the first time because the first time we didn't know what it was. We had no data. We didn't know how bad this, that, the other thing. This time we have more data. We've seen how different places can have dealt with it, how effective different things have been, how we can avoid different things. So it feels like we have more data. And it also seems like there's less likely to be a complete shutdown this time as there was last time. Now, could I be wrong? And could that be proved to be a terribly painful mistake? Yeah, it's possible. But I can't, I was surprised at the extent to which we panicked last time. I just don't really see it happening again in at least the same way. And I mean, there was a lot of commentary last time about places like Sweden, for example, how they didn't shut down and they were going to be a disaster. But that never really materialized in the way that a lot of people said it would. And plus, now we are much closer. I mean, we're 6 months closer, I guess, maybe seven, depending on where you count, but closer to a vaccine. Now, could that be like 4.5 years instead of 5? Maybe. But it also could be that we are like 6 months away, and that is more so the scenario that I'm picturing. Of course, there's risk of if it's wrong, this could be bad for the markets and for well humanity in general, but not to mention my sanity. But yeah, I just think the dynamics of a second round are very different from the first. So yeah, I think the big story for the rest of this year, well, for the next month at the very least, is going to be round two, you know what, and election. Now, does the election matter? I'm going to touch on this point. And the answer is, in my opinion, probably a little bit, but probably not nearly as much as almost any commentator that I've heard talk about it. Because realistically, the election is an unknown. We don't know what's going to happen. Once we know what's going to happen, we can work towards a future where that is allowed to happen. And I don't think there's really that necessarily going to be that big of a policy difference between that affects the market between the two. Now, I'm not a specialist there, and I could be wrong, but every time in the past that there's been an election, the market has then continued existing, and over the long term, there's been some big changes, but there hasn't been that big changes. Anyway, I don't want to get into politics here, but my point is I think the election is going to create an uncertainty overhang, but I think that either way, the market's going to be happy once it's over, even if it doesn't necessarily love the result as much as it could have. So one of the things I've referenced many times in the past when I'm looking at the general market is sentiment. Now, sentiment is notoriously hard to judge because everyone has their own idea of what it means, what it is, and who to pull when figuring out what even you're asking. Personally, I've historically used the AAII sentiment indicator survey, sentiment survey, if you will. Now, people keep saying recently, and for the past few months, people keep saying, "Oh no, that's wrong." Um, it may be, it may not. What I can say with regards to that is what I'm seeing, what I'm looking. I go through Twitter, look at what someone says, look at the comments, talk to people. What I'm seeing is oddly kind of in line with that, but it's really hard to judge because you're always facing your own things. But anyway, recently we were back to more very relatively few people bulls and relatively a higher number of bears than normal. Now, every time there's a bump in the market, we lose a few bulls, and when there's not a bump for a while, we gain a few bulls. So I mean, there's nothing that creates sentiment like price momentum. And so I'm kind of surprised, but not surprised that we're still basically, many people seem to be bearish. And I get it. It's also what I'm seeing. A lot of people seem to be bearish. Now, for a long while, well, I guess still, I am cautiously bullish. But there's a lot of near-term uncertainty, and I'll get to more of that in a second. And the other thing on sentiment, I mean, CNN Fear and Greed Index, another one to look at. It was kind of bullish. Sorry, people were kind of bullish a few weeks ago. It's back to more so neutral. So let's wind this all back towards a summary, shall we? My outlook for the next 3 months is more cautious than I've been in a while. Now, why is that? There's a lot of uncertainty. There was a hard bounce back. I don't know how people are going to react to A, the unknowns, B, the um, layoffs that we've seen, or if that'll continue, or how the data may fail to um, show a full recovery. And I don't know what's priced in. So for that reason, I'm cautious for the next few months. Plus, I think that the lingering effects of people not wanting to maybe go out, spend money yet, or, obviously the stimulus question is big here, but I don't know what's going to happen there. So I think that for the near term, there's a lot of can we get a few more months to a vaccine and then hopefully we can resume? And that is where I go to my next point. And my next point is that if you look 9 plus months out, so almost next year, but just less, I'm very positive for markets. So in the short term, like I said, cautious, especially cautious, but in the longer term, 9 months out, I'm very bullish. So the question I'm looking at is how to do I act on the caution in the near term, or do I just ride it out for the long term where I am quite bullish? And so the other question that I'm wondering along with this is when will the market begin to look past if we start to get a vaccine, if it looks like it's going to be widespread and all that stuff. at what point does the market start predicting the 9-month plus scenario versus the 3-month uncertainty? And I don't know that. I'm probably not smart enough to figure out exactly when the market's going to start looking at what's next versus looking at what's very soon. So I don't know. So I just wanted to conclude this video with a little point of optimism, if you will. For a while, a few years ago, people were saying, oh, this economic cycle is long in the tooth. There's very little capacity remaining. Very full employment means limited growth potential. This, that, and the other thing. There's no bankruptcies, so there's a lot of companies that are allowed to survive, even though they maybe don't have the financial strength to. And a lot of such arguments. And I am sure they will persist, but I do know that with this downturn and with this unfortunate economic shock, there is a lot more growth potential, a lot more expansion potential than there was before. So take that with for what you will, and that is my last point there. And that's all for today, everyone. Thank you so much for watching. I really hope you enjoyed this not investment advice video. And I'm really interested in knowing when does anyone who made it here really think we will start getting back to business as usual, or start getting back to normal? And I know I added an extra layer there, but I'm just wondering, do you guys think that when we get a vaccine that it will be the beginning of back to normal, or will there be additional challenges before then? And that's that's something I'm really interested in other opinions of. So if you can let me know, that'd be great. So until next time, have a great day.